China and Brazil will trade in their own currencies for large-scale trading, ditching the US dollar as an intermediary, according to government announcement on Wednesday. This move is expected to promote bilateral trade and facilitate investment. This follows the news that more countries are using the Chinese or local currencies in trading with China. Meanwhile, according to the website ASEANbriefing.com, an official meeting of all ASEAN finance ministers and central bank governors this week discussed the possibilities to reduce dependency on the US dollar and other major currencies from financial transactions and move to settlements in local currencies. But that news has not been independently verified. So what are the considerations of some of the countries in switching to local currencies or the Chinese yuan in trading with China? What conditions have made such moves possible, and what does it mean for the global trading and financial systems? I'm pleased to be joined from Beijing in the studio by Professor Gong, Vice President and Research and Strategy at the University of International Business and Economics, Israel, and Warwick Powell, Adjunct Professor from Queensland University of Technology. Gentlemen, welcome to The Point. First of all, Professor Gong, let me go to you. So according to the deal, I mentioned China, the world's second largest economy, and largest depending on how you calculate it, and Brazil, the biggest economy of Latin America, have decided to do their transactions in yuan and the real directly in large-scale tradings without the need to go through the dollar. What does it mean and how does it work?
Yeah, so this is the headline. The real substance of this deal is that Brazil essentially agrees with China to set up a offshore RMB clearinghouse in Brazil. And this is a standard practice, actually. And already there are about like 25 offshore clearinghouse centers throughout the world. And most of the transactions actually in Hong Kong. So what it means is that Brazil is now part of a offshore RMB market. That supports circulation of RMB in this market, and also facilitates trade and also investment. And for things like Chinese tourists going to Brazil, it'll be a lot easier for paying expenses with RMB. So this is a very significant step towards RMB internationalization, with Brazil being a very large market with substantial trade and economic relationships with China. And I think it's a very good thing to see that Brazil is part of that offshore RMB market.
Professor Powell, what is your take on the significance of this deal? And also the Brazilian Trade and Investment Promotion Agency said the new arrangement is expected to reduce costs and promote even greater bilateral and trade and facilitate investment. How exactly will the arrangement be implemented according to your understanding?
Look, Lucian, it's a very significant move because what this signals is that two of the world's largest trading partners are moving concretely towards implementing what is in effect a currency multipolarity framework. It is all about reducing costs, streamlining transactions, and ultimately also reducing risks. Over the past so many years, there has been a growing concern around the weaponization of the US dollar, which has created risk and uncertainty for trading partners. And I think that the events of the last 12 months have really hammered home the risks and the need, therefore, for trading partners to mitigate those risks by moves exactly like this.
Well, Brazil is not the only example. For instance, Russia, Saudi Arabia, Iraq, among other countries, have made similar announcement of using RMB or other local currency in trading with each other. Professor Gong, are we seeing an acceleration of the trend of deviating from one single dominant global currency to diversifying by countries and companies? What are your observations?
Well, I actually was just debating with someone before coming to the show. If you look at the data, the only data available, the usage of RMB on the SWIFT system, which is, and we all know what a SWIFT system is, the percentage of transactions in RMB is actually declining. But of course, the trade in RMB is more than just happening on the SWIFT system. I think the majority of the trade is actually happening outside the SWIFT system. For example, China's trade with Iran, with Russia, for example, example, technically that it cannot be possibly happening on a SWIFT system. So, but we don't have the exact data yet. But I think even in the absence of data, we cannot deny I think it's probably a hypothesis or theory. I'm fully convinced it's a fact that RMB's weight in the entire global trade is definitely going up, especially against the backdrop of these agreements have been announced so far with respect to Saudi Arabia, with Brazil. These are major economies and been historically using U.S. dollar in a very dominant way, and now things are happening. So I think I'm pretty convinced that the role of RMB in the international global trade, in global trade, as well as actually in terms of foreign governments holding RMB as part of a reserve currency, is definitely expanding. I think international organizations also agree with that. You look at the percentage of the special drawing right at IMF. It's the third largest percentage actually, behind the dollar as well as the euro, and already surpassing British pound and yen. So I think RMB is definitely becoming international currency. There's no doubt about it.
Yeah, Professor Powell, what is your take? Should the United States be concerned that the dollar may be losing its dominance in the global economy? Professor Gong just now mentioned the importance of renminbi versus the dollar. I mean, according to latest reports, the dollar is still accounting for 59% of central foreign exchange reserves as of 2022, and the RMB a mere 2.8%. Is it too early to say, the renminbi is catching up and possibly replacing the status of the US dollar?
The way I tend to see it, Lucian, is that we're moving into a world of currency multipolarity. A lot of people use the word de-dollarization, and I think that sends the wrong message. The real message here is that trading nations around the world are looking for lower risk, more cost-effective, cheaper, quicker ways of transacting amongst each other. And that does mean moving away from heavy dependency on the United States dollar for that purpose. That's probably the first point that I'd make. The second point I'd make is that there is also a change in the infrastructure that supports these payments. So we're not only talking about the currencies that are multipolarizing, but also the technical and information infrastructure that makes this all possible. So the previous speaker mentioned the move away from SWIFT. That's an important part of it, and there's a whole lot more besides that institutionally that is seeing the world becoming far more multipolar today than it has ever been.
Yeah. Professor Gong, last November, 5 ASEAN countries, including Indonesia, Malaysia, Thailand, the Philippines, and Singapore, signed a MOU on regional cross-border payments, basically to boost regional connectivity and enable local currency settlements without the need to convert to US dollars. And Indonesia president said the cross-border payment initiative will be extended to the global level. So is that along the same trend that we're talking about? And why are more countries considering diversifying from the USD?
Well, at a very fundamental level, the use of currency is intimately tied to the trade picture. ASEAN is China's largest trading partner, period. And China is also the largest trading partner with, practically every country in the Southeast region. So with that in mind, there's really no need to go through the US dollar anymore if the trade is just between these two countries. So I think there's a broader trend towards reduce the role of the dollar in terms of just the trend in the international trade. But on top of this, I think a lot of countries have seen and have observed how the dollar has been weaponized by Washington to be used in a political means, and I think there are many examples of that. Granted, there is actually also voice within the United States to be against this kind of a trend. But nevertheless, I think Washington has been totally abusing its power, basically, the power of the dollar, international trade, international economics. And unfortunately, I think at this point, it's already too late for Washington to reverse trend. And I'm not even doubting whether it can even reverse trend with the political environment in Washington right now. So I think that's a broader trend, and it's just going to be strengthened. And I think RMB's internationalization initiative and the progress is just unstoppable.
Finally, Mr. Powell, allow this laywoman's question from someone who doesn't really understand. But I mean, when you have one single currency, for instance, for the Eurozone, it actually facilitates trade, facilitates connectivity. But when you have multiple currencies that are taking up different polar positions, isn't that going to make trade more costly because you have to convert your currencies when you're trading with different partners instead of nominating using one currency? Sorry if this question doesn't make sense.
Makes some sense.
Look, it makes total sense, and I think that there's two parts to the answer to that. One is a technology question, and the other one, of course, ultimately is about how countries relate to each other on the basis of a fundamental, what I call the real economy relationship. So at a technical level, the ability to handle exchanging between multiple currencies at the back end of a payment system is easier today than it's ever been. And there have been tests already run through the Enbridge initiative with the Bank of International Settlements in Hong Kong, involving a number of central banks, including the PBOC, the Central Bank of Thailand, and the Bank of the UAE, which actually makes possible this multipolar currency transaction environment with no experiential problem for the lay user. So I don't think it's going to be a problem going forward in the way that it would have been, before modern technology and digitalisation fundamentally supports more efficient exchange rates and things.
We have to leave it there. Time has run out. Thank you so much, Professor Gong and Professor Powell, joining us from different parts of the world. With that, we come to the end of this edition of The Point with me, Liu Xin. As always, you can follow me on Facebook and Twitter using the handle Liu Xin in Beijing. Thanks for watching. You've got The Point.